Yeah, so you invest a lot outside of your own market in Phoenix. So how do you analyze a market when you're not from there? Or, do you just rely up on the operator, or what's your process like there?
Yeah, it's interesting. You want to look at economic trends. So you want to look at population growth, income growth, housing growth, um, industry diversification. You want to look at crime levels. There's a lot that you can do and a lot of research you can do to do research on actual markets or right down to the zip code. There's a great site called city-data.com where you can really get into the weeds and take a look at all of those. And I sat through a training it was probably 5 years ago, where Neil Bawa walks through there's 8 different metrics that he likes to look at to determine what markets are the most feasible and the most advantageous to jump into. And at one point I actually did the research on over 80 different markets in the United States and kind of came down to a small handful of markets that I wanted to focus on. And I've gone real big on those markets since that point. So um, that's kind of been my process there.
Yeah. Yeah, do you look at supply and demand too? Because, there's population and job growth and also job diversification. Like
Yep.
Phoenix is it's pretty diversified. It's kind of an overpriced market right now. But,
Yep.
Vegas is highly reliant upon entertainment. And I just read a market beats report, which is basically a market report from the company I work with, Cushman
Sure.
Wakefield, and they analyze markets nationally, and they said that the Sun Belt markets had 3 times more multifamily development than other parts of the country.
Yep.
So, what's your process with looking at supply and demand and kind of comparing that with the population growth and also the job growth?
Yeah, really, really good question. I think a lot of that, specifically being here in Phoenix, we had a very, very large number of new starts a couple of years ago, and that's actually turning into to new doors that are becoming available and impacting rents pretty significantly here in Arizona. Vegas actually got hit pretty hard. A lot of the Sun Belts did. So yeah, I mean, basic supply and demand fundamentals apply to this, just like they do, any kind of market segment. And it's important to look at that. I think that the trends we're seeing now is that starts will likely start to drop off, or not starts. Starts did drop off, but actually, new product coming on the market will start to drop off towards the end of this year, early next year. So we're going to see a lull again, where we should see things stabilize, which should have a positive impact on our average rents. So yeah, I think it's important to look at those. The guys with the economics degrees that are watching the trends are much smarter probably than you and I, Weston. So it's important to watch those guys and follow their lead. Um, but it's interesting if you watch the big players, you can just kind of follow behind what they're doing and generally do very well, just following the trends that you're seeing the bigger folks take. So
Mhm.
yeah.
Yeah, so how much do you think the new development plays in the Sun Belt? How much do you think that affects the value add, Class B? You go in and renovate the apartment, make it look new again. It's usually
Hmm.
1980s, 1990s product, or maybe early 2000s.
Yep.
How much do you think the new development affects those projects? Because the new development is brand new and, a lot more expensive. They're probably offering concessions at the moment.
Yep.
How
Yep.
does that affect your investments?
Yeah, so I think it absolutely has an impact. I was not quite sure the impact that it would have. Rewind a couple of years, I didn't think it was going to have as big of an impact as it has had, and the economists all suggested that it would. So obviously, if you have a class property that is doing rents at $3,000, but they're offering 6 or 8 weeks of concessions, it's not too difficult to do the calculation to see average rent per month starts to get into the range that's very close to the high B plus or A minus asset classes. So that does trickle down all the way down. I would suggest even down into the C class, because it is there. There is more doors that are coming on the market, which do impact everybody, and I think they're impacting much more than I initially thought they would. But I think we'll start to see that soften here in the coming months.
Yeah.